Ethereum price rises by 50% against Bitcoin in 1 month. But there's a catch. The rise in the ETH/BTC pair is painting a bearish technical pattern, hinting at a potential correction. ETH, Ethereum's native token, has been continuing its uptrend against Bitcoin, BTC, as euphoria around its upcoming network upgrade. The merge grows. ETH at multi-month highs against BTC. On the daily chart, ETH/BTC surged to an intraday high of 0.075 on August 6, following a 1.5% upside move. Meanwhile, the pair's gains came as a part of a broader rebound trend that started a month ago at 0.049, amounting to approximately 50% gains. The ETH/BTC recovery in part has surfaced due to the merge, which will have Ethereum switch from proof-of-work mining to proof-of-stake. Ethereum's rising wedge suggests sell-off. From a technical perspective, Ether stares at potential interim losses as ETH/BTC paints a convincing rising wedge. Rising wedges are bearish reversal patterns that occur when the price trends higher inside a range defined by two rising, converging trend lines. As a rule, they resolve after the price breaks below the lower trend line by as much as the structure's maximum height. Moreover, a declining volume and relative strength index, RSI, against a rising ETH/BTC further increases bearish divergence risks. This gives weight to the wedge's bearish setup for a target of 0.064 BTC, or down 11% from today's price. Ether looks stronger versus dollar. ETH/USD has formed what appears to be a double bottom. This pattern resembles the letter W due to two consecutive lows, followed by a change in direction from downtrend to uptrend, as illustrated. Meanwhile, a double bottom pattern resolves after the price breaks above its common resistance level, and, as a rule of technical analysis, rises by as much as the distance between the first bottom and the resistance. Experts predict how high Ethereum's price could go in 2022, a make-or-break year. Ethereum is the most well-known altcoin, and it's much more than just another cryptocurrency for many investors and enthusiasts alike. And experts say it could grow in value by as much as 400% in 2022. Ethereum's native token, ETH, has grown immensely in value since its creation. Launched in 2015 by computer programmer Vitalik Buterin, Ether has increased in price from 0.311 at its 2015 launch to around $4,800 at its highest late last year, with plenty of volatility along the way. The blockchain-based software network has many uses and applications across the tech world, especially for gaming, music, entertainment, and decentralized finance, DeFi, making it one of the most popular and widely used cryptos this past year. At an annualized rate, Ether's ROI is nearly 300%. That means early investors have nearly quadrupled their investment every year since the summer of 2014. Crypto prices are notoriously volatile, however, so financial experts say only invest what you can afford to lose, and never at the expense of foundational goals like emergency savings and high-interest debt payoff. So how high do experts expect Ether's price to climb? Here's a look at the factors contributing to Ethereum's volatile, yet upward climbing, price projections, and what experts predict for this year. Ethereum price predictions. Ethereum going this year, and each qualified their predictions by saying it is nearly impossible to predict the future price of Ethereum. And other experts have said ETH's price will be even more volatile than Bitcoin in the coming months, mainly because Ethereum is transitioning its technology to a less energy-intensive version that insiders colloquially refer to as Ethereum 2.0. Ethereum's upgrades could make it more appealing and sustainable for widespread use. But until that happens, experts are waiting to see how investors and companies building their tech on Ethereum's platform respond to the changes. Despite the challenge of predicting the price of a volatile cryptocurrency, the experts we spoke with generally agree ETH could once again break $4,000 in 2022. Ethereum earned its reputation as the first blockchain to use smart contracts, which are basically coded instructions on the blockchain that execute financial transactions through algorithms. Now new Ethereum alternatives with similar capabilities are hitting the market and changing the demand for ETH in both favorable and unfavorable ways. Here are a few variables that impact Ethereum's price. Smart contracts made it possible for artists and creators to mint, make, and sell the digital artwork now known as non-fungible tokens, NFTs. That was both a blessing and a curse for Ethereum, as the blockchain's popularity led to what some call a bottleneck on the blockchain. Think of the mall parking lot on Black Friday, only digitally. Now, with so many users, it's become increasingly expensive to transact on Ethereum. The Ethereum team in response has developed new upgrades to its infrastructure, but it's taken a few years to develop the technology. In the meantime, a number of new companies have created add-on solutions that operate on the existing Ethereum blockchain. Additionally, entirely new blockchain networks have also been released as and marketed as potential Ethereum alternatives, driving traffic away from the Ethereum blockchain and adding new competition, which can both increase or dampen any product's popularity in the market. For investors, more people using the Ethereum network means more support for the value of your investment, so competitors pulling users away could hinder Ethereum's value over time. If cryptocurrency and NFT became household terms in 2021, Web3 could make a run of it for 2022. Web3 refers to an open-access version of the internet built on blockchain technology, where financial transactions are more transparent, individuals have more ownership over their data, and, through cryptocurrency, users own most of the infrastructure. Companies like Ethereum and similar blockchains like Solana, Cardano, and Tezos are working to develop the infrastructure on which the future vision of Web3 can be built. Investors see these new developments as similar to the dot-com boom when Google, Facebook, and Apple were first coming into public awareness. 2022 will be the battle for Web3 and the next evolution of the internet, says Belina. The future of Ethereum. Despite Ethereum's competition and other factors contributing to its ongoing volatility, there's a general sense of optimism that the original smart contract blockchain will make it through this era of trials. Ethereum has over 90% of the NFT market, said Arslanian. This is going to be a very important year for Ethereum, a kind of a make-or-break year. There is good reason to expect a quick rebound from the current slump Ethereum is experiencing. Xanos tells Next Advisor. What I think Ethereum has is that momentum of community that allows for a group of very smart people to create innovation and see new opportunities. Xanos says, at the core, my optimism is tied to just the versatility of what you can do with Ethereum. Ethereum Roadmap. The Ethereum network's growing popularity has brought forth a unique scaling challenge. It created a strain on the network, causing it to get clogged and dramatically increasing gas fees to execute transactions on the network. To address this issue, the developers behind Ethereum came up with a multi-phase upgrade known as Ethereum 2.0, formerly Serenity, and now Consensus Layer. The upgrade is expected to bring proof-of-stake, POS, consensus mechanism to the Ethereum network. It's a transition from Ethereum's energy-intensive, mining-based proof-of-work, POW, to a more efficient consensus mechanism that will help ensure Ethereum's long-term viability. With this upgrade, the consensus layer will be a more secure, user-friendly, and scalable blockchain that can accommodate the growth required for Ethereum to develop into its goal of becoming a global supercomputer. Overview of the roadmap. The consensus layer is set to be fully launched in several phases within a couple of few years, and these phases are primarily divided into three phases known as the beacon chain, the merge, the shard chain. The beacon chain went live on December 1, 2020. It introduced native staking to the Ethereum network, a necessary feature of the network's transition to a POS consensus mechanism, separating the Ethereum blockchain from the Ethereum mainnet. The second phase, called the merge, is scheduled to arrive in the second quarter of 2022 and will merge the beacon chain with Ethereum's mainnet. This will allow staking for the whole network, signifying the end of energy-intensive mining. The third and final phase is shard chains, responsible for scaling the entire Ethereum network by increasing its capacity to process transactions and store data. It's a multi-phase upgrade to finally achieving a scalable Ethereum network. Instead of settling all transactions on a single blockchain, shard chains will divide these activities across 64 new networks. Over the period of time, the shards will gain more features and many more will be rolled out into multiple phases, offering low transaction fees, while leveraging the security of the Ethereum blockchain. Because fewer bytes will be needed for storage, it will become considerably easier to run an Ethereum node from a hardware standpoint. If you are considering investing in cryptocurrency tokens, we recommend that you always do your own research. Look at the latest market trends, news, technical and fundamental analysis, and expert opinion before making any investment decision. Keep in mind that past performance is no guarantee of future returns, and never trade with money that you cannot afford to lose. Now thanks for watching and see you in the next video. Until then, goodbye.